Mutual funds and ETFs are both bundles of securities in the way that they are comprised. Oftentimes, they're a mix of, whether it's stocks or bonds or other types of investments. There are usually a group of many positions inside those funds. Mutual funds tend to be actively managed, although there are indexed funds as well, but they tend to be more actively managed, whereas ETFs tend to be more indexed or rules-based design, but there are some that are actively managed there as well. So it can be either way. With a mutual fund, they tend to be less tax efficient. They tend to be the situation where I don't know what I'm getting when I try to get out until the end of the day. I notify the mutual fund company and I get the share value at the end of the day. With an exchange-traded fund, because it is traded on an exchange, like an individual security, like a stock would, it happens in that moment. So I know what I'm dealing with. I can get in and out of it more rapidly and know what I'm dealing with. Sometimes that can have appeal. On the other hand, it can create instances where people use these for more active trading, and that can create fluctuations in market values and things. So we like both of these for different reasons. At times, we tend to be more inclined to use active managers in mutual funds, particularly with bonds, and when we have bond investments. And we tend to like the ETFs more so for stocks because of their low cost, and we can control how we want to define the portfolio emphasis with the bundles we choose. There are times when we like to have more active management in portfolio design, and that's relevant too. But in any case, ETFs are a great tool to keep costs lower, and mutual funds tend to provide us more of the active management we might want. I think it's important for investors to understand that ETFs can have advantages from a tax planning purpose over mutual funds. Mutual funds, oftentimes, people can have investments that other investors, because of market situations or whatever it may be, they may abandon that investment and cause selling. And that can cause the investor who stays in the fund to get hit with a tax consequence, capital gains distributions. Whereas in ETFs, I define when I sell my shares, and that's when I get my capital gains experience. It's very rare that ETFs distribute capital gains the way a mutual fund would. So there's some advantages for ETFs when it comes to cost. There's advantages when it comes to taxation. And so we like to include ETFs as part of the portfolio design for those reasons. But there's also reasons why mutual funds can have benefit, and that, again, comes back to that active management that at certain times we really want to have the benefit of the right person at the helm. For a given example might be, if we're going to have a high yield bond investment, we want to make sure there's someone doing some screening for the kinds of bonds we might have. If we're going to have foreign stocks, it can make a lot of sense to have the right people making selection of which markets to participate in, which foreign markets, and which stocks make more sense in those environments. So there's good reasons to have both.
Once we've made the active allocation decision and we know which money is going to go into which buckets, we need to pick the right security to execute upon that strategy. There are literally tens of thousands of investment products that you can go into. Our job is to find the best risk-reward opportunity for ETFs and mutual funds for the medium to long term for each of our investors. We don't believe in one-size-fits-all portfolios. We understand that each individual has different needs. But what we try to do is we try to take all our best ideas and put it into a portfolio strategy that meets your risk tolerance and your financial outlook. And that way we achieve the best outcome for all of our investors over the long term.
As Brian said, everyone's situation is different. And if you think you might need some help, we're happy to be of help to you. We work with people on ETF and mutual fund strategies. Other people have individual securities. Whatever your situation, we're happy to see if we can be of help in putting it into the context of a financial planning situation as well as your portfolio. So let us be assistance to you with a complimentary consultation. Give us a call at Asset Management Resources at 508-771-8900 or reach out to us through the web at amrfinancial.com.